For more, we are turning to the partner and director of trading research and education for MarketGauge.com, Michelle Schneider, and Euro Pacific Capital CEO Peter Schiff. Michelle, let's start with you. Both the United States and global stocks, they are reacting to Trump's improving health condition, now leaving the hospital, on expectations also that Washington will reach a deal, a stimulus deal. What do you expect to go on this week?
Well, first of all, nice to see you again, Sarah. Well, what's very interesting is we have to sort of break the stock market down into different pockets. So what really gained the most today in terms of the sectors was the biotechnology space. And that has really very little to do with the stimulus and a lot to do with how quickly Trump at least has perceived to have gotten over the symptoms. And of course, we know part of it was the cocktail that he's receiving using part of the Regeneron drugs, but he's had other drugs as well. So the hope and the incentivization for the drug companies to continue with symptoms that they can deal with and vaccines is very strong. And that really helped the market as well as that whole biotech space. As far as the rest of the market, Trump's health may have had not as much to do with it as not only the hope of the stimulus, but also sort of banking on potentially a Biden win is what the market looks like it's reacting to. Because starting Friday, even though the market swooned with the announcement of Trump being ill, the small caps, the transportation, and the retail sector are what we like to look at as the real inside of the U.S. economy, actually all closed green, and those gains continued again, with even though the NASDAQ and the SPY and the Dow closing up, the IWM, which is the Russell 2000, closing up even stronger. So yes, there's part hope on stimulus. There's part, obviously, good news about Trump getting better, and of course, proving to people that maybe it's not as scary, which is the message he wants to deliver. And then there's also the part of the polls and the Biden win and what that means for the overall economy going forward.
Well, it's interesting because the polls had Hillary Clinton winning in 2016, so a lot of people skeptical to even believe the polls at this time. Peter, you've been very doubtful that another round will get done before elections. We're less than a month away from them. Has that viewpoint changed, or do you still think the market is bubbling up on this false hope?
Well, it's certainly possible that we can get another round of so-called stimulus, but none of this stimulus actually helps the underlying economy. I mean, it doesn't do anything to increase productive output of the economy. It does stimulate the markets. It makes stock prices go up. So clearly there's an interest for that, but that doesn't help the actual economy. All it does is debase the value of our money. We very well may get another one of these phony stimuluses before the election. But I think the prospect of a Biden victory is decisively negative for both the economy and the stock market. The only silver lining in that cloud from the perspective of the stock market is since the economy will be so much weaker under Biden, that the Fed will be called on to do even more monetary stimulus. So there'll be a lot more inflation created, a lot more money printing in a Biden administration than in a Trump administration, although we're going to get a lot of both regardless of the outcome. But we'll probably have even more of it if Biden wins than Trump. And so that could provide more fuel for the stock market bubble. But remember, taxes on corporate earnings are going to rise substantially, not only at the corporate level, but on the individual level, because corporations are subject to double taxation. So we're talking about massive increases on corporate taxes, effective tax rate, that substantially reduces the value of those corporations. So it's going to take a massive amount of air to blow up a bigger bubble, given that the fundamental value of stocks will be so much lower under Biden than would be the case under Trump.
Well, Michelle, you mentioned the election coming up and that the market's reacting to the polls and a possible Biden victory. But we're weeks away from that election. And much like Peter just mentioned, Wall Street is going to possibly see these higher taxes and even tighter regulations. Now, others are saying, much like Peter also said, that this fiscal stimulus, there would be more of it under Biden, and that would sort of help stocks. What do you think?
Well, I think it's really difficult to make any kind of assumptions of what's going to happen and who's going to win. But I do believe we can look at the market right now. And as of right now, with Biden ahead in the polls, whether it's real or a mirage, and given the fact that it's no secret that corporate taxes will go up, As I said, the U.S. economy, in terms of what we're looking at in terms of the small caps, which is the manufacturing within the United States, it's not these large corporations, transportation, which of course is the demand side of the economy, how goods are moving, and retail, based on the fact that we are a consumer-based economy, given it's a huge percentage of our GDP, all have rallied over the last 2 days. Could it just be sort of a rotation after there was too much money in the tech sector and that's come off? It's possible. Could that all reverse if Biden actually wins? That is also possible. But I think there's one other thing that it really doesn't matter. One thing I actually totally agree with Peter on is about inflation. If the dollar track continues the way it's going, which has been going south, and the fact that there's been so much shortage in terms of food with supply chain disruption, climate change, whether you want to use that term or not, it just is a fact that the food is a shortage around the world right now. China actually has employed a clean plate rule now where half portions are being given at restaurants. This will create a possible inflation, which could turn to a stagflation, which means both the Democrats and the Republicans will have very little tools to be able to do to avoid that. So the dollar is something that I would keep very big eyes on right now, no matter who wins.
Well, speaking of the dollar, Peter, we just saw a rise in gold prices on a weaker dollar right now. There's been this long-term cycle where gold actually tends to bottom out every 8 years or so. I believe the last low we saw was in 2016. So we wouldn't really see one or the next one until 2024. Does that mean it's only going to remain going up from here?
Well, I think gold is now building a new base of support around the old all-time record high. We got up to 1,900 back in 2011, and then gold sold off and pulled back down near 1,000. But now we've really broken through those highs. And I think once we finish building this new base of support, gold is going significantly higher. And yes, in that same environment, the U.S. dollar is going to lose a lot of value, not just in terms of gold, where it will lose the most value, but in terms of a lot of other fiat currencies that will lose less value than the dollar. And so that does mean the cost of living in the United States is going way up. And so, people who are staying at home and who are living off of government checks, those checks are not going to buy nearly as much because the price of everything they need to live is going to be getting higher and higher and higher. So the value of those benefits is going to go lower and lower until ultimately, if we completely destroy the value of the dollar and we have hyperinflation, then none of it matters. It doesn't matter how much money the government sends you if you can't buy anything with it.
It doesn't matter how much money the government sends you or what party sends you the money. Either way, we're looking at lose-lose situation here. Michelle Schneider, Director of Trading Education and Research at MarketGauge.com, and Peter Schiff of Euro Pacific Capital. Thank you both so much for your time today.
Thank you.
Take care.